Imagine a future where every U.S. state treasury is now required by law to hold a specific digital asset, XRP. This isn't just a hypothetical scenario, it's a bold vision that's rapidly becoming reality as digital currencies move from the fringes to the very core of government finance. This isn't a minor policy tweak, it's a seismic shift in public finance, one that's sending ripples through every level of government and the financial sector. The State Fiscal Stability Act of 2025 mandates that a portion of each state's reserve funds must be held in XRP, aiming to create a more resilient and efficient financial system. This law is designed to protect state budgets from traditional market volatility, while also embracing the speed and transparency of blockchain technology. This move modernizes government operations, sending shockwaves through political and financial circles. Lawmakers, analysts, and citizens alike are grappling with the implications of this digital transformation. Digital assets, once considered fringe or experimental, are now at the heart of state finance, forcing officials to adapt quickly to new technologies and rethink traditional fiscal strategies. Integrating XRP isn't just about buying crypto. It's about weaving a new asset class into the machinery of state budgets and fiscal planning. This requires new expertise, updated systems, and a willingness to innovate at every level of government. The scale of this initiative is unprecedented, and its success depends on careful execution, robust cybersecurity, and above all, public trust in the new system. For everyday citizens, this change will impact everything from school funding and public services to disaster response and community aid, as state coffers become more agile and responsive. By diversifying reserves with XRP, lawmakers are betting on a future that's not only faster and more secure, but also more transparent and accountable for everyone. The State Fiscal Stability Act of 2025 is a landmark law that's reshaping how states manage their financial reserves and approach fiscal security for the future. Passed after months of debate and analysis, this act signals a major shift in government policy. It requires every state to allocate at least 3% of its official reserves into XRP, a leading digital asset. This move is intended to modernize state finances and introduce new forms of value storage alongside traditional assets. Traditionally, these reserves were held in ultra-safe assets like treasury bonds and cash, so this is a radical departure from decades of established practice. The goal is to diversify holdings and potentially increase resilience against economic shocks. The act was crafted in response to vulnerabilities exposed in the legacy banking system, especially during recent financial crises that left many states scrambling for liquidity and stability. To ensure security and compliance, states must use federally approved custodians for their XRP holdings. These custodians are subject to strict oversight and advanced cybersecurity protocols. For the first time, a public dashboard now lets citizens view their state's XRP holdings in near real time. This sets a new standard for transparency and allows taxpayers to track how their state is managing digital assets. The law's efficiency could be critical in emergencies, allowing states to deploy funds instantly when disaster strikes or urgent needs arise, rather than waiting days for traditional transfers. Critics worry about the volatility of digital assets, but the 3% allocation is designed to limit risk. A federal oversight committee actively monitors the program, ready to recommend adjustments if needed. The Act's framework is intentionally flexible, designed to evolve responsibly as states adapt to new technologies and changing economic conditions. This is a new era of public finance, faster, more transparent, and more resilient than ever before, with the potential to inspire similar reforms across the globe. Why XRP? Federal analysts spent over a year evaluating digital assets, focusing on speed, cost, scalability, and institutional maturity. XRP transactions settle in 3 to 5 seconds, a game changer for moving large sums quickly. Transaction costs are a fraction of a cent, saving taxpayers millions. The XRP ledger can handle thousands of transactions per second, meeting the demands of state governments. Ripple's institutional focus and global network gave lawmakers confidence in XRP's real-world utility. Unlike energy-hungry cryptocurrencies, XRP's consensus mechanism is highly efficient and sustainable. Lawmakers saw XRP as a mature, regulated ecosystem ready for government use. Its combination of speed, low cost, scalability, and energy efficiency made it the pragmatic choice. XRP is now the backbone of a new era in state treasury operations. Imagine XRP as digital gold for state governments, scarce, neutral, and universally accepted, but with the added advantage of moving at the speed of the internet. Unlike traditional gold, which is heavy and slow to transport, XRP exists entirely in the digital realm, making it instantly accessible to any state, anywhere in the world. Historically, gold was the backbone for settling debts between nations, providing a trusted store of value. Today, XRP enables states to move value across borders instantly and at a fraction of the cost, eliminating the need for physical shipments or complex banking arrangements. For instance, if California needs to send emergency funds to Texas, it can do so in seconds, bypassing the delays and high fees of traditional bank wires. This speed can be crucial in times of crisis, allowing states to respond rapidly to disasters or urgent needs. XRP's divisibility and portability make it far more practical than physical gold. You can send tiny fractions or massive sums with equal ease, and there's no need for physical security or transportation. Billions can be moved with just a few clicks, not with fleets of armored trucks or elaborate logistics. This efficiency saves both time and resources for state governments. As a decentralized asset, XRP isn't controlled by any single state, central bank, or corporation. This ensures true neutrality, making it a level playing field for all participants and reducing the risk of political interference. By holding XRP, states equip themselves with a 21st century settlement tool, one that is fast, secure, and highly efficient. Transactions are verified in seconds, and the underlying technology is designed to resist fraud and hacking. This digital asset provides the stability and trust that gold once did, but it's built for the demands of the digital age. States can rely on XRP to safeguard their reserves and maintain financial confidence. As a result, states are now stocking their digital vaults with an asset that brings all the benefits of gold, security, value, and trust into the modern era of finance. The State Fiscal Stability Act positions XRP as the new bedrock of state financial stability, ensuring governments are prepared for the future of money and global commerce. The Act sets an official benchmark price for XRP $8,065 per coin, a figure calculated by a bipartisan commission. The price ensures the total XRP supply can collateralize trillions in state and local assets. The commission balanced liquidity needs with practical acquisition targets for states. Economic models considered the value of assets to be tokenized and XRP's finite supply. Politics played a role, with the final figure a compromise between caution and ambition. The benchmark isn't a market guarantee, but a stable accounting unit for the program's launch. States use this price for compliance and reporting during the initial 3-year phase-in. This shields treasuries from short-term volatility as the program ramps up. After 3 years, the Oversight Committee will reevaluate the benchmark based on real-world results. The Act has sparked a race among states to lead in digital finance. Crypto-friendly states like Wyoming, Texas, and Florida are going beyond the 3% mandate, passing new laws and offering incentives to attract blockchain talent. Governors and treasurers are publicly touting their progress, framing it as innovation and fiscal responsibility. Some states are piloting new uses for the XRP ledger, from digital bonds to streamlined benefits. This competition accelerates adoption and positions states as future financial hubs. Even skeptical states are now forced to engage, rapidly increasing digital literacy in government. The rivalry is fostering both collaboration and innovation nationwide. The great digital rush is transforming public finance from coast to coast. For state treasurers, integrating XRP is a massive operational shift. The first step, secure custody with federally approved digital asset custodians, ultra-secure digital vaults. States acquire XRP through institutional trading desks, executing large trades without disrupting markets. Every transaction is meticulously documented for compliance and auditability. The real challenge is integrating XRP into legacy accounting systems, requiring new software modules and procedures. IT teams and vendors are racing to enable real-time tracking and reporting. Treasury staff are undergoing extensive training on digital asset management and security. This is a nationwide upskilling effort, transforming how public money is managed. Success depends on both technology and the adaptability of thousands of public servants. The Act's implementation is as much about people as it is about code. XRP's integration is a philosophical shift, ushering in radical transparency and stability. Public dashboards now let anyone monitor state reserves in real time, setting a new bar for accountability. This transparency builds public trust, especially during crises, as citizens can verify emergency fund deployments instantly. Diversifying into XRP reduces dependence on traditional banking, providing economic insurance against systemic shocks. States can transact even if banks falter, ensuring continuity of essential services. Instant, low-cost settlement between states streamlines cooperation and commerce. The new system fosters a more dynamic, resilient national economy. States are now financially interconnected in ways never before possible. The long-term result, a more integrated, stable, and transparent union. This is just the beginning. Digital assets are now woven into the fabric of government. Citizens can expect faster, more transparent services. Imagine instant tax refunds or real-time tracking of public spending. The Act legitimizes digital assets, encouraging broader adoption by institutions and the private sector. The infrastructure built by states will serve as a foundation for future innovation. The U.S. is now a global leader in responsible financial technology integration. This public-private model could become a blueprint for other nations. The journey is ongoing, and staying informed is crucial as the landscape evolves. The integration of XRP is the first step toward a more transparent, efficient, and resilient government. The future of public finance is being written today, in code and in real time.